As Donald Trump prepares to take office on January 20th, if there has ever been a time that there are so many proposed tax changes that are going to affect LLC owners and small business owners, it is now. That is why I want to go over this proposed legislation with you, but make sure that you bear in mind that this is where it is today. And as always, before I jump into this informative video, I want you to like, comment, and subscribe because we cannot afford to miss out on any tax law changes as they are coming forth. Now, let's get after it. One of the biggest changes is the TCJA change that is going to affect small business owners at the end of 2025. Right now, we still have the qualified business income deduction, which allows us business owners that have flow-through entities to take a 20% deduction of our income against our taxable income. That is a huge deal. We've been getting literally a break over the last few years. But if that law does not get extended, if that law expires, we are going to see an increase in tax. So we are hoping that Trump is going to come in and is going to extend that law and maybe increase it to 25%. Wouldn't that be great? Let's see what happens. Stay tuned. The second thing that we are watching is our SALT deduction. That is the deduction for sales tax and property tax, state and local taxes, which include our DMV fees, our property taxes, our state income taxes. Right now, that SALT deduction is capped at $10,000 per filer of itemized deductions. That really impacts high taxable states like California, New York, New Jersey. Trump is proposing to increase that SALT deduction to $20,000. That means it's going to double. That would be really a big help to those that are in those high taxable states. I'm hoping that he just lifts the SALT deduction period, because a lot of the taxes come from New York, New Jersey, and California. So let's stay tuned to see exactly what happens to the SALT cap that is currently in place at $10,000. Our corporate tax rate is currently sitting at 21%. One of the proposals is that the corporate tax rate drop to 15%. This is for businesses that are filing as a corporation, an 1120. That is such a huge dip in taxes. That's a 6% dip. And if that happens, we are going to see more corporations hiring. We're going to see people investing back in their business. I am really hoping that that corporate tax rate does drop to 15%. Give the corporations a break so that they can hire, they can invest back in their businesses, they can be more creative, and we can really spark our economy. Because when you cap the economy by putting higher taxes on corporations, they're going to make sure they stay profitable. And the one control they have is to start laying off employees. You don't want that to happen. So decreasing that corporate rate can spark the hiring of employees. So stay tuned to see what happens to our corporate tax rate. One of the other elements that they're talking about is the expensing of equipment, the Section 179 deduction. This deduction allows for an immediate expense of equipment and vehicles that you buy and put in service for your business. If you don't use Section 179, you default to Section 167, which requires you to write the cost of your equipment off over time, whether it's 5 years, 7 years, or 15 years. Section 179 allows you to expense it in the current tax year. Allow me to give you an example example. Let's say that I'm going to operate a delivery service and I'm going to go out and buy a fleet of vans, a fleet of trucks. Am I going to be able to expense that $400,000, that $100,000 bill in the current year? Or am I going to take that $400,000 over 5 years? Being able to expense it currently means that me, the business owner of the freight company, is going to go buy from the company that owns the vans, that owns the equipment. Therefore, that equipment company, that van company is going to see more sales. Our economy is going to spark. I am going to get an immediate write-off, so I'm more inclined to purchase that. Another example would be, I'm thinking about getting brand new computers for my employees. Can I expense all of the cost of those computers this year, or do I have to write it off over 5 years? If I'm able to purchase it and write it off this year and lower my tax bill, I'm more inclined to go get those computers this year. It's so important to understand how these proposed tax law changes are going to affect you as a business owner, going to affect you as an LLC owner. Do not close your eyes on this. Make sure you are staying informed and that you are doing your due diligence and making sure you're analyzing the impact that these tax laws going away are going to have, so you are ready. The tax laws staying where they are, or the tax laws going to the proposed changes. For example, the lowering of the corporate tax rate. For example, the expanding of the write-off of the state and local tax deductions. You want to know how it's going to impact you as a business owner, because this can mean you're going to put more money in your pocket. If you are looking to grow your business in 2025, wouldn't it be nice to know your tax bill has dropped by $5,000, $10,000. You can go invest that money in equipment, invest that money in marketing, invest that money in employees? Of course it would, because that's how we grow our business. So stay tuned, because now that you know, you now have to make sure you stay in the know. I need you to like, comment, and subscribe so you do not miss out on this informative information. And make sure you tag a friend, because friends do not let friends overpay tax. Now go get after it.